Now we discuss the certification for claiming exemption or deduction. Means there are particular exemptions mentioned according to Income Tax Act for the different headings or for the different purpose. So the first heading, that is under section 35A, preliminary expenses. The following expenses are included in the preliminary expenses, that is the cost of preparation of project report, feasibility report, as well as survey or any other survey, engineering services expenses, legal charges of shifting an agreement between the assessee and other person, legal charges for drafting and printing MOA, that is Memorandum of Account and Article of Association, registration fee under the Companies Act 1956, as well as expenses in connection with the public issue of shares, debenture of the company, with the underwriting commission, brokerage charges, charges for shifting, typing, printing, and advertisement. For such type of expenditure considered as a preliminary expenses, and the tax treatment for that, it is applicable to an Indian company or the resident or non-corporate assessee. 1/5 of total eligible preliminary expenses are allowed in 5 equal installments starting from the year in which the business started, or an existing unit undertakes expansion, or the new unit start the production or the operation. So make sure when we discuss the preliminary expenses, 1/5 of each year claimings are or the exemption are allowed by Income Tax Act. Then we discuss under section 35E. This section provides the deduction of expenditure incurred in operation relating to the extraction, production, or prospecting or any mineral specified in the 7th schedule of the Act. The expenditure is allowed to deduct over a period of 5 years. Starting for the year of commercial production, the deduction is available only if the accounts are audited by qualified accountant and auditor's report along with the return of income forwarded to income tax authority. Only 5 years are the period for the exemption or the deduction. Under section 80HH, it is related with the exemption for the backward area. The deduction under this section is available to the industrial undertaking or an approved setup in the backward area within wherein 20% of profit and gain of such business is deductible, but the gross total income of such undertaking, the deduction is available for a period of 10 years, starting for the industrial undertaking commenced manufacture or the functioning. This is available only if the accounts of such entity are audited by an certified auditor or certified accountant and report along with the IT return to the income tax authority. Then we discuss the deduction under section 80HHA, which is allowable to the small scale industrial undertaking. So according to this section, the amount equal to 20% of profit and gains derived from the small scale industrial undertaking shall be allowed as a deduction for 10 years. It is similar to the backward areas. Starting from the year of undertaking begins manufacture or produce articles. It is this type of deduction again is available only if the accounts are audited by a certified auditor or the accountant and must be submitted to the IT with the IT return form. Then deduction under section 80 HHB, it is related with the foreign projects. Under this, it provides for the deduction for gross total income for an amount equal to 50% of profit and gains from the business of execution of foreign project on a contract basis or a foreign project of some other assessee who has undertaken the project on a contract basis. Means the person who is working with the contract basis with the foreign projects, the deduction is available only if the separate books of accounts are maintained for the foreign project and is audited by the qualified accountant, and the same the report of the accountant is must be submit to the prescribed form to the IT authority along with the return of income. Then the deduction under section 80HHC related to the business of export. Business of export, the profits derived from the business of export of goods out of India mentioned in this section shall be allowed to deducted from the gross total income of the business. undertaking, the assessee should furnish the report of chartered accountant certifying that the deduction has been claimed correctly as per the requirement of the section in the prescribed form along with the returns of income. So next point, that is under section 80 HHD, is related with the business of hotel, tour operator, travel agent, etc. Means in this section, it should be deduction under section can be claimed by the company or the resident person engaged in business of hotel or tour operator or the travel agent. 50% of profit derived from the above mentioned services and also part of remaining profit is kept in specified reserves to be utilized for the development of business. The deduction is claimable only if the receipts or the services from the foreigner are in the convertible foreign currency. Otherwise, it is not applicable or it is not deductible. This deduction can be claimed if the receipts are in Indian rupees, provided the amount of rupees had been obtained by surrendering the convertible foreign currency into authorized dealer of foreign currency. The assessee has to furnish the report to of a CA, chartered accountant, stating or the explaining that the deduction has been correctly claimed under this section. The report should be accompany the return of the income. And last point, that is, one more point is there. Deduction under section 80 HHE, export of software technical services outside India. If any technical services provided outside India, that is a computer software or technical services, the deduction is allowed from the gross total income equal to the profit and gains from the business of export of computer software or by providing technical services outside India in connection with the development of computer software, and the receipt from such should be convertible in foreign currency brought to India. And last point, that is the assessee should furnish the report of chartered account with the claim has been correctly made in accordance with his section in the prescribed format with IT returns. And one more thing is there, deduction under section 80IA, which is available for the small scale industry and cooperative societies which have started business from 31st 3 2000. The profit should be related to the business of hotel or the operating cold storage or ship. Means 80IA is related with the hotel or the operating cold storage or ship, etc. The amount should be deduction is 30% of profit for corporate SSC and 25% for non-corporate SSC. The deduction is available for 10 years and for cooperative societies 12 years. Means for others it is 10 years and for cooperative society it is 12 years. The account must be audited by the auditors or the certified auditor, or the auditor's report is in prescribed form should be furnished with the IT returns. So it is important when we discuss the recording of or the claiming for the exemption and deduction under this heading. So in this chapter, we discuss about what is tax audit, who is the person in charge, that is the tax auditor or accountant, what are the types of tax audit report and the scope or the role of auditor in tax audit, as well as what are the various claim or exemptions related or the deduction related with the tax audit provided in this chapter.